Happy Thursday, everybody. Not seen you guys for a couple of weeks. So yeah, let me give you guys a quick update. Like the last few weeks for me have been, pretty busy. I missed the call 2 weeks ago. I was flying to Knoxville for the upper echelon mastermind, which was absolutely unbelievable. My book came out, yay! Which I'm so excited about my book. So all the people that were at the Echelon Mastermind all got a signed copy of this book. I've had some incredible feedback. Thank you, everybody, for the really, really kind words. This was not easy for me, right? So, I'm a deals guy, I'm a maths guy. And whilst I've got all the technical knowledge that there is on buying and selling companies and doing roll-ups, and raising capital and all those different things, I could have easily written a technical book. I have a technical book, right? I could easily have written another book, but I decided to write a fable. And the reason I decided to write a fable was because a technical book doesn't capture the really important things that we go through when we're doing deals: psychology, drama, emotion, seller's remorse, people getting cold feet, lenders pulling out at the last minute, all those things. So I captured all of that drama throughout the book. It's 90,000 words. It's 200 and something pages. So I'd love for you guys to read this, right? Let's move on with deal number two. It's our good friend, the king of these presentations, Mr. Jason Bora.
Good morning, folks. We are Belmont Company, a limited liability corporation based in Wyoming. Thanks to David Jarrell. Thanks for that. And today we are taking you to the big leagues with Big Leads, a targeted lead generation capability, because you can't spell deals without leads. So the team for this right now, you're looking at it. Myself, Jason Bohr, I am the cavalry to this point. It is kind of an issue. We'll talk about that. We've got 3 owners that we're looking to transition out. We'll talk about that more as we get through the presentation. But for now, the cavalry. Who am I? Jason Bohr. I'd like to think I look pretty good in a pea coat. I'm known for the vision and strategy I bring to an M&A team. I'm also known as the growth and scale component throughout my career. And at the center of that has really been a background as a digital marketer. And with that, I've been able to work with some pretty cool clients and work with some pretty cool people as well. So recently we opened the aperture of the deal origination machine a little bit. We wanted to see what existed in the world beyond, 1 to 5, make sure we were capturing the top end of 5, moving a bit towards 6 in that range. Apparently there was a typo in the system because what we got back had an additional decimal place, an additional digit to it. And as you can see here, this deal is a bit larger. We're averaging 61 million across the last 3 years, looking at a transfer of value score at roughly 71.8. We use the model for this. The seller psychology is sitting at a 65.7, and that brings us to a market multiple of about 4.26. Now, the interesting thing, I hopped on a call with this gentleman and he asked what my investment criteria were. I said, we're looking at about 1 to 7. And he said, well, you're missing a decimal place. There's an extra digit there. I told him, I said, you're likely out of my league. And his retort to me was, well, that's too bad. I rather like you. So I'd like to keep this conversation going. So that's what we did. Who are we? So Big Leads is a customer acquisition platform. We enable brands to identify, educate, and acquire in-market consumers via a scalable mix of targeted online marketing channels. We have 100 million as a performance marketing firm for in-market household finance customers. We have 25 employees based here in California. We are 100% self-funded. We have no institutional investors behind us to this point, and we've delivered almost 10 million consumers to partners in 2021 alone. We've been also profitable since our inception in 2002. Here's a brief look at the performance across the past few years, split between revenue and adjusted EBITDA, and a few of the milestones that have got us there. Of course, 2021 is going to jump out at you. I'm actually going to call right after this one with this gentleman to discuss more about that, why it jumped so high.
It'll be a COVID bump. Yeah, 2021 would have been 2021 will be a COVID bump for online customer acquisition.
Yeah. So what I do want to talk about is additional ways from that year and learnings to apply it more towards the growth strategy in a bit more detail. So if you want a continued overview, the core business, we specialize in generating targeted leads through our diverse internet advertising channels. We've got email, search, social media, display, and native ads. Our customer base spans various industries, specifically mortgage, credit, insurance, and education as our four primary pillars, and targeting businesses that require high quality leads to drive their sales efforts. We use a multi-channel approach for sales and marketing, and we leverage digital advertising, affiliate marketing, and content marketing strategies to attract and convert leads. One of our competitive advantages is obviously our extensive experience in lead generation. We also have some pretty advanced use of proprietary software, including marketing automation tools and a strong network of affiliate partners that ensure high quality traffic and reliable, compliant lead delivery. Where do we make our money? Right now, that's a rough split across the four primary verticals. We'll talk about some of the additional growth capabilities when we get to that slide. But this is roughly the split between mortgage, insurance, which jumped up, Carl, to your point, in 2021 when we pivoted the core business engine that way. And of course, credit and education are doing very well for us. And as far as the market analysis, you can see up in the top right, we sit pretty neatly with some of the more household names in this space. And the other interesting item is the roughly 18% of the market that's built of smaller other players. We'll talk more about that when we get to the growth strategy and our intentional M&A. So if you're looking for a bit more of essentially how the sausage was made, here's how the machine works. Across our media network and our demand network and the various channels that we use, we drive you to our platform for on-form conversion and optimization, remarketing, retargeting, quality assurance, of course, distribution and compliance. And then we drive that down to our verticals. In mortgage, we've got over 2 million targeted mortgage inquiries since 2002. We've powered large banks and lenders and smaller mortgage brokerages. Within credit, we've got a innovative credit score marketing platform that provides consumers to top credit monitoring firms. Under the insurance umbrella, thousands of life, home, and auto insurance leads each day to the world's leading company. Within education, we've got high converting compliant education leads for some of the top schools with our network of targeted EDU sites. And when it comes to our client list, I did my best to redact some of these names, but you can see we play with some of the more sizable household names in the space: a leading mortgage company, a prominent home loan provider, a top insurance comparison platform, a well-known insurance quote service, and some pretty major players in marketing. The market overview, it's looking pretty good with a CAGR of 17.46 from now to 2030. We're experiencing significant growth, and it's driven by the importance of these digital marketing strategies and the adoption of more advanced technologies. The global market for lead generation is currently valued at $9.476 million in 2003, and it's expected to expand quite significantly to be a $9.5 billion market by 2028. And this is fueled for a demand for personalized marketing, integration, AI. We've heard good things about that, and automation tools, and the expanded use of social media. Essentially, we're competing more and more for increasingly limited attention spans. So what can we do? We can leverage a lot of these strategies to really get to you and connect. So let's talk about the growth strategy. First up, health insurance. Doubling down on health insurance is a very clear path forward. We did very well with that in the past, and we know if we double down here using this sort of recipe and the machine that we've got in place, we can see an expected growth of 15% across the next 12 months. Auto insurance, this is front and center for us. There's room to immediately double the revenue here across the next 12 months. Of course, this is the fun part, growth and expansion. Verticals and services, home services, another front and center sort of target for us. And we define that here within big leads currently as solar windows and bathtubs. Of course, there's room to evaluate where else this will play. But that offers an immediate adjacency for our core business engine. And then we've got markets like pet insurance, which offer a space where we can own the book and really automate it. Of course, the net of why we're all here, right? Strategic and intentional M&A. So by strategically executing roll-ups of those smaller players, that 18% we were talking about, we can grow our market share and really step further towards some of the bigger players, the household names that you saw depicted on the market share chart. Additionally, bolting on capabilities such as performance and ad tech personalization, that's going to yield significant gains for us in cross-selling and cost synergies. Got an interesting conversation on the books with a personalization and ad tech capability tomorrow, actually. Financial projections. If we were just to steady state this, step in, take a look at the capital growth rate and watch it go, we're doing all right. And of course, if we put a little bit more of the rocket fuel into this and assume a 20% growth, we're likely to be okay. That said, I'm going to take us over to the one sheet. And this is my favorite part of the call because I get to turn the stage and the mic over to all you brilliant minds and sort of answer a lot of the questions you've got and get a lot of that really good feedback. Can everybody see the one sheet?
Yep.
I've got some questions for you on this, buddy.
Absolutely.
As do I.
So ordinarily, I'd be really excited by the numbers.
Mm-hmm.
In this instance, I'd like, so I'm in this business, but from a very different angle. I have an outsourcing service business providing offshore people to mortgage and insurance companies to do a lot of the back end heavy lifting in India rather than in the US because it's a lot cheaper.
Right.
So I know in those businesses in the last few years, as interest rates have gone up, the level of revenue that we're seeing come through because they're reducing everywhere has come down significantly. And the reason for that is certainly in the mortgage business, there's not as many completions on home loans. And that falls into two categories. There's the new starts and then there's the refi. And the refi marketplace is on its knees because everybody refied in when money was free. And unless they have to move, they're not going to move because they can't afford to move. So that has a knock-on effect into the other sectors like insurance as well. And insurance, there's been some change because there's a lot of areas where the insurance companies for P&C insurance, for example, have redefined the maps because of fire risk, and some people can't even get insurance now. So I mention this because I'd want for you to be confident of your revenues and profitability by line of business, taking those two big things into account, and reassure yourself that it's bottomed out and you're getting the accurate figures, which can still be very profitable based on those exotic conditions that have impacted that industry, kind of thing. If that makes any sense. So you've probably done all that, but it doesn't come through in. It's the next level of detail that you might get into on this, and so that's my 2 cents worth. I hope it wasn't inappropriate to say that.
Yeah, no, that's great feedback. I agree that it's more the double click down, something we're looking to provide in an investor deck, which we should have done this coming week. But I agree that those sort of considerations are top of mind and they're very contextual.
Yeah,
if you want to hit me up separately on this, do so, because I'm happy to help you.
Excellent.
Yeah, I'm going to go to Dan Giordano in a minute because this is his kind of wheelhouse in terms of marketing agencies. Like my only comment at this point is clearly this is an absolutely world-class business, right? The multiples model as of right now, I've only modeled the multiples up to the $2 million EBITDA level, right? So I don't think this is anywhere near a 4.3x multiple. I think this is closer to 8, maybe even 10 as a multiple. I think this business will cost you at least $50 million, maybe more. So you're way outside of SBA. You're going to be into private equity. So let's say it's a 60 million deal. You're probably looking at 15 million or so of equity that you're going to have to raise, and then a big chunk of senior debt from a mainstream bank. So it's definitely doable. This is probably the biggest of all big boy pants deals. It's a phenomenal business. It's growing like crazy. This is a major trend in the marketing space. I just think you're going to be. I think a trade buyer is going to come in and blow you out of the water. But I absolutely think you should go forward very strong with this. But I think you've got to start talking to large PE firms or family offices. You're going to need, I think, at least $50 million of PE money into this deal. But man, like if you can get it, you said the guy likes you, you've built great rapport with him. Obviously, your lever score is pretty high. His mud score is pretty low. You tend to find that, in a gigantic business like this, he's going to have a world-class C-suite that's running this business for him. And this is a really, really fun market to be in. So he's probably not distressed at all. So great deal, but I think this is going to be an expensive acquisition. Let's go to Dan Giordano. Dan, what a cool deal.
Yeah, no,
What do you
this is
think?
definitely a big boy pants deal. So great. First off, great job, Jason. On presenting it and packaging it this way. Quick question, well, I guess two questions. One is, do you know, is the model pay per lead model, or is it a combination, of they're just selling, services as far as retainers for some of these companies?
It's more of a hybrid model, but I can definitely break that out in a bit more clarity as to how we're doing that in contrast to just the pay per lead.
Okay. All right. And then what is the reason behind them listing to sell? Is there any motivation, specific that you're aware of?
Yeah, so in our conversations, they talk about this pretty regularly. They've been around since 2002, and while they're okay with staying on for another 10 years to cash out, they speak regularly to the idea of what is next in their lives. They're 57, 56, and 50. So one out of those three owners is a little bit of the oddball out, but given the kind of work they've been putting into it since 2002, they're open to entertaining the idea of an immediate exit. They are thinking about the next steps in life, grandchildren, family, things like travel that are more important to them. So it's really, we want to move on to the next step in life, in contrast to the idea of we want to go start something new. Is that helpful?
Yep. No, definitely. And, totally agree with what Carl, was suggesting, because I've looked at, the largest marketing company I've looked at so far was 30 million that we have an offer in on. And the EBITDA on that was around 4.5, I believe, from what I remember. Right.
Right.
So, yeah. So I definitely believe that, Carl's spot on with valuation is probably significantly higher, but there's ways to work around that, like what Carl talked. So I'd be glad to jump on a call with you, Jason, kind of work through some things with you. I have some ideas how to get it funded, as well, and maybe some connections for you. But overall, it looks like it's a pretty solid deal as long as you can, make the numbers work. So.
Right.
Yeah.
Thank you. I appreciate
Great. Thank you, Dan. Lydia, what do you think?
Hello, everybody, and great presentation, Jason. Excuse me. I'm personally excited about the deal. I think it's with your background, Jason, I think you can really make this work. I think there is an opportunity, possibly, if not to buy it outright, possibly come in partially and replace owners who are looking to exit, but I'm sure you already know that. Other than that, I actually have access to a large digital marketing network here in Austin. And if you need any more introductions in the space for more agencies, I'm happy to make some introductions.
Amazing. I'd really appreciate that. Thank you.
My pleasure.
Thank you, Lydia. Leonard Feinstein?
Yeah, hi,
Brilliant.
good morning, everybody. How are you, Carl? Good seeing you
Good
a
to
few
see you.
weeks ago. Yes, sir. Jason, yeah, great presentation. Just want to mention something on the private equity side. Been talking to a lot of capital providers and PE lately, and there is an instrument out there called a unitranche, where a lot of these big capital providers are raising funds to invest in people like you, whereby they provide a debt instrument, which is typically mezzanine. So it's going to be a little bit of a higher interest rate, but this business is just bleeding cash flow. But they'll also tap into their equity fund as well. And then they'll also give you a deal fee. So if you combine all of that, you can, in some instances, not have to raise anywhere near the full 15 million, let's say, but maybe under $1 million. They'll make you roll over your deal fee typically into the deal. But a lot of these PE groups now are moving into these unitranche kind of things where there's a combination of debt and then they also get equity in the business. Now, that's the upside. The downside is they'll take most of the business, right?
Mm-hmm.
So they'll, you know, if you're going to put up 20% of whatever the equity might be, or even 10%, after your rollover, they'll take, you know, 80 or 90% of the deal, but they'll give you a carried interest, depending upon how much you X their money. So, you know, they'll give you 10% carried interest, right off the bat. At least, you know, if you provide reasonable results for them, and the carried interest just means that after everybody gets paid back, you get the first 10% of the profit. If you really blow it out of the water, they'll give you 20 or 30%. That's all negotiable, but there are and I'm happy to talk to you about this offline. But there are instruments out there where you don't have to come up with as much personal equity as maybe you would have had to a few years ago in PE.
Mm-hmm. Excellent. That's really helpful.
That's awesome. That's awesome. So, hey, Jason, you got some killer feedback there and some killer like offers of help, right? From Dan, from Mark, from Lydia, from Lenny. Like, this is the real power of this call. When you put monster deals up like this, there's people in this community have got some chops to kind of help you. So, yeah, you know, when you play full out with such world-class presentations like this, everybody wants to help you. So, so great job. Let's carry on with the questions, and then we'll get to Leslie's deal 3. We're kind of bang on track time-wise, which is good. Let's go to Ayaz Hamid.
Jason, great presentation. I was curious, I think just furthering Mark's point a little bit, where you mentioned that there's different sectors who are affected by microeconomic conditions, right? It's insurance, mortgage. You mentioned these guys have 4 or 5 verticals they have. And the reason that I think they're verticalized by business lines is because it requires different domain expertise to do different verticals. So for example, B2B versus B2C lead generation is very different, I presume, right? Within healthcare, if you're selling devices into doctors' offices versus if you're a health plan who's trying to enroll patients into their, you know, weight loss program, those are all lead generation examples, and they're very different sort of use cases. One thing I'd be curious about is, do you know on their team, do they have domain experts for each vertical that can speak the language of the customer? Because that would sort of tell you how easy it is for you to roll out new verticals in terms of business lines, right? My assumption is that you cannot roll out new verticals unless you have in-house domain expertise. That's one thing I would look at in this business in terms of growth strategy.
Yeah, that's a great point. And that is something the business has leveraged to this point. They know it is the buy a guy sort of approach. So when they're entering a new vertical, because they have seen areas where you would think it would just like point it somewhere else and it'll work, it doesn't, right? There's that contextual information that is very different, very important. So we do have the sort of buy a guy approach that you see to this point on the team. It's a great consideration. I too am looking to find out a bit more of how that's scalable and how they've approached it to this point.
And I'll tell you why I mentioned that, because in advising various technology startups or sort of companies across different sectors, your competition is, if you're going to some smaller company, like sometimes you have some like individual smaller firms or even individuals who are very, very good at like very niche verticals. So for example, I was advising a company that was doing basically member engagement for health plans, right? And they had interviewed all these lead generation companies that ended up going with one guy who was really good at basically finding people on Facebook doing just member engagement for weight loss programs, right? And they were paying him a fortune to do that. So it's almost like, you know, your competition varies in this. It's a very nuanced kind of a thing, but that's one thing I would sort of pick their brain on. But great presentation.
Yeah, great point. Thank you.
Jason, I may have a buyer for this if you want it.
Sounds good.
Yeah, let's hook up offline.
Yeah.
Nice. All right, perfect. Any other questions, guys, from the room? Anybody else got any thoughts, any ideas, any clarifying questions for Jason? Speak now or forever hold your peace. No? All right, cool. So Jason, again, world-class pitch, phenomenal deal.